In this module, we continue our tour of the balance sheet by learning the special accounting procedures related to inventory in Chapter 7, receivables in Chapter 8, and long-lived assets in Chapter 9. What they have in common is that they are all assets. And since we're at the midpoint of the course, this would be a good time to recall that the main objective of financial accounting is to provide useful information for external readers, mainly creditors and stockholders of financial statements and reports. To be useful, that information should be relevant, helpful in making decisions, and provide a faithful representation of the financial activities and condition of the business. With regard to assets, we want to be sure that the value reported reflects the cost principal, but also that the amount reported using the cost principal is not misleading to readers of the financial statements. Some of the special procedures we're going to learn are focused on achieving those goals for the specific types of assets we're covering in that chapter. For example, Chapter 7 deals with inventory, and specifically, methods to determine the amount reported for ending inventory on the balance sheet and the amount reported for cost of goods sold on the income statement. There are 4 methods that we will learn, and all are acceptable. The choice is up to management. After the method is chosen, a procedure called lower of cost or market, LCM, is then applied. LCM states that inventory must be stated at whichever is lower, the original cost or the current market value of the inventory. This is important because a dishonest business could report old, obsolete inventory at its original cost to mislead those reading the financial statements into thinking it had lots of valuable inventory that could later be sold. Then a creditor might be willing to make a larger loan, or an investor might be willing to pay a large amount for the stock. Chapter 8 involves receivables. We strive to achieve the same goal with the receivables. We want to make sure that the amount of receivables on the balance sheet approximates what we really expect to receive from people who owe us money. So on the balance sheet, we reduce receivables by an amount that we don't expect to collect. At the same time, we want to follow the expense recognition or matching principle, matching the expense of the bad debt to the credit sale in the same period on the income statement. We do both through the allowance method of accounting for receivables, which we'll be learning. Chapter 9 treats long-lived assets. We will review the process of recording depreciation on long-lived tangible assets. They have a physical existence, and learn 3 methods of how to calculate depreciation. We will then learn about long-lived intangible assets. They have no physical existence, such as copyrights, patents, and trademarks. All long-lived tangible assets other than land wear out or depreciate. We learned that in Chapter 4. If you recall, on the balance sheet, we use the accumulated depreciation account to reduce the cost of the asset by how much we believe it's worn out. That way we can see the book value, how much the asset is worth on our books after the wearing out has been subtracted. Some intangible, long-lived assets wear out too. We call that amortization, and we do the same thing with them. By reducing the cost by the amount we estimate they have worn out, we give readers an idea of the remaining usefulness of that asset. So the procedures you're learning will help readers, specifically you, better understand what you are reading on our financial statements. Remember that the notes to the financial statements will have details on which inventory method or depreciation method was chosen. That's important information because the methods chosen directly affect both net income on the income statement and the amount reported for the asset on the balance sheet. Think about how this will impact you as a reader of the financial statements as a business owner or manager, and its relevance and importance will become clearer to you.